Hey guys, Kill Stokes here. Welcome back to the Trading Edge video. Today I have a special edition for you where we're going to take a look at a recent trade review that I did in the live trading room. Now, this is going to be more impactful than the normal videos that we do where we're just looking at trading opportunities because one, from a technical perspective, this video is going to give you some ideas on what clues should I look for in the market that will allow me to get into trades, or what clues should I look for in the markets that tell me, hey, maybe I should avoid this situation. Also, we're going to talk about confidence and belief in yourself as a trader, which is something that is very important. One of the biggest mistakes or obstacles that I hear from traders is that they have a lot of doubt. They don't have a lot of confidence. They don't have a lot of belief in kind of following through based on what they're seeing. And that causes all types of psychological mistakes. And of course, the biggest trading fault, which is self-sabotage. So hopefully the tips in this video will help push you over that edge as well. Now, if you're someone that feels similar to the trader in this video where you're having a lot of doubt, or maybe you're seeing something on the charts, but you're not at the level where you're quite sure if you're seeing it correctly, here's what I advise you do. Hop in the live trading rooms here at Tier 1 Trading. We do a London session, we do a New York session 3 times a week. Not only do Jason Graystone and myself go through different markets, go through different pairs, and break down different opportunities on the chart, but we don't mind doing Q&A. We don't mind doing trade review. So if you have a pair or a trading opportunity that you're looking at and you want us to break it down and you want the opinion of the other members of the community, bring it to the live room. Let us break it down. Let us answer those questions for you live, and that way it can get you rolling on that learning process of becoming a consistently profitable trader. All right? So www.tier1trading.com. Hop in the live rooms. You run them Tuesday, Wednesday, and Thursday. And I hope you guys enjoy this video. Take notes. All right, so let's hop into, we're going to go straight to Euro Yen first, because this is the trading idea that Tom shot us for the day. And I'm going to walk you guys through this. This will be kind of like a follow-up on what we did in the Q&A on Monday. By the way, Canada, that bearish trade did hit target twos for me. Very happy about that. Not a home run, but maybe a mini home run. Almost 100 pipper on secondary targets. I was very proud of that one. That was pretty big. We'll see if that can keep going down. But here's Tom's trading idea, and this is on the hourly. Now again, I don't know if higher time frame is being taken into account. I personally take higher time frames into my account in trading. I do think it's something that I never want to say every trader should do, because you can do whatever the heck you want. But I do think there's a value with looking at the higher time frames. I do think having perspective can sometimes give you clues that you might not necessarily have before. So here's my interpretation of Euro Yen. And we'll start on, well, we're starting a daily and we'll work our way down. Because again, Euro Yen, still kind of an interesting situation. So the most recent move here on Euro Yen was a retest of structure, right? If we zoom out real quick to the weekly, again, you're going to see that we're at that level of consolidation. Where are you at here? There you go. We haven't really changed much in the last few weeks, but just as a reminder, in case you're new, we are at that level of consolidation. Certainly room to move higher, but not a clear path there because we are, again, in this zone of consolidation. So there is room. We're not at the high of structure, so we're not at like a ceiling or anything like that, but we're at a point where the waters are a little bit rough. You can still steer through them, but they're a little bit rough. Our most recent move on the daily, again, was a pullback to previous structure, a hold, nice 3-bar reversal, and now we're working our way back up to retest our previous structure high zone right here. On the 4 hours where we had the opposite scenario, if you guys remember, 4 hour, we actually had a break and close below structure, and then we came back up and we did the rotation. This was the Tom trade from Monday, and now we're going back down to the hourly. So, or soon to the hourly. So the one thing that I want to say, you just missed it. We just did the trailing stops lesson. The one thing I want to say is, again, we want to go through that IPDE process, and this is how I personally operate. I want to see where price action is at, right? I want to identify what price is doing, where price is at, and then make my prediction. So the first thing I want to do is I want to ask myself, where has price gone to, right? So we can all agree this is our most recent spike high. Would you guys agree with that? Yep. So I'm going to put a line here, and I'm going to ask myself the question, where did that recent spike high come to? What would you guys say? Look left. Something might leave clues. We came to a previous level of structure, right? Now, did we hold at this previous level of structure, or did we violate that previous level of structure? We held. So for me personally, I see that we came up to a previous level of structure, we held, and then we pushed off of it. With how I interpret the markets, because we held and we did not violate, I cannot predict a move higher from this time frame, right? And we'll go down to the hourly because this is Tom's time frame. Sorry, but I cannot predict a move higher. So right away, right, going through this process, identify, test of structure, hold. My prediction is initially, hold of structure, bearish, right? We put in our bear move back down to previous structure. The question I want to ask myself is, do I have any reason to predict a move bullish? And my answer is no. So right then and there, that cuts off any trading opportunity for me. Right then and there, I go through the checklist. I check yes and I check no, and I cannot proceed. So just to put it out, again, that's my perspective on this. I'll read through the plan though. So he says price made a new structure high from the previous day, right? So we're looking at the new structure high being made right up here, I believe is what he's looking at. Yep. And remember, this is we're looking for a pullback, and we needed to clean up the rules on this. This was the one from Monday where it was like it was kill zone, but close enough to the kill zone, but 50%, but sometimes this, sometimes that. So that's going to be worked upon. But his trading plan said he needed a pullback and then a higher high, higher close. So he said, I entered at market per my rule. So higher high, higher close, we put in the previous day at 22. And I don't know if that's 22 my time or his time. My guess is it would be probably not his time. My guess is the higher high, higher close. I can maybe see it on here. The chart's hard to see, but I'll give you an arrow here. Right here was the higher high, higher close that he took for his buy, that green candle. So price came down, pulled back into the top of his kill zone, and then he waited for a higher high, higher close entry, which is right there. So he said, entered at market per my rules, but didn't really like doing so as price looks like it may retrace even further before pushing up. So the question that I would ask here is, one, I like the fact that he entered the trade, even though he didn't like what he saw, right? Because we don't make decisions on trading based on likes, do we? If that was the case, there'd be a lot of trades that I wouldn't enter because I don't like them. There'd be a lot of trades that I'd be in that don't meet my plan because I do like them. So we don't base them off of likes and feels. We base them off of our process and our plan. Now, a question that needs to be kind of a question that I would follow up on myself as a trader. And this is kind of when you do your journaling as you're trading and you write your notes about what your thoughts and feelings are when you enter a trade, because this is going to help you kind of figure out why those emotional errors are happening. He says, per my rules, I didn't really like it. I didn't really like doing so as price looks like it may retrace even further before pushing up. So now the question is this: why does price look like it may retrace before pushing up? Right? Why? Because it's okay to say that, right? But does it help us out any if we don't have a reason? So what we need to do is identify why, right? I didn't like entering this trade because I thought that I was fearful, right? We can enter that. Or she says, well, it looked like that because price can do whatever the hell it wants. That is true. Not going to fight you on that one, Orsi. But we have this fear that price looks like it's going to retrace before pushing up. What we need to do is we need to decipher and say, hey, is this an emotional fear? Am I just saying I think price is going to go lower because I'm fearful that it will? Or Is there something technically in the market, or fundamentally, if you're into that sort of thing, is there something technically in the market that makes me believe that? And if there is something technically in the market, then we need to identify it. So for example, if I were looking at this and I was going to say, hey, I feel like price is likely to retrace a little bit lower. I'm saying, okay, why would I feel like that? What is one thing that I can choose? You guys see anything? I see one thing, right? Well, we did break and close below these lows right here. So maybe instead of feeling like that, it's the lower low, lower close that allows me to quote unquote feel that way, which is a technical reason. And now I can ask myself and maybe down the road discover maybe there are rules I should take if we get a lower low, lower close, whether it's not taking a trade, whether it's looking for a bigger pullback. But we can't just make decisions off of like. We can't just say, well, I felt like price was going to retrace lower, because that's pointless, right? Does that help us out at all? If Adam thinks price is going to retrace lower, how is that beneficial? How is that quantitative? Does that help Adam fix his plan at all? We need to identify why we felt that way. What made us feel that way? Right? The same thing like sitting down with a counselor. Well, I didn't do it because I was scared. Well, why were you scared, Akil? Why was I scared, right? And then we can discover if it's something that we're actually seeing in the chart that is causing us to think that, or if we're just making it up. Because here's the secret, right? We make up a lot of stuff as traders. We make up stuff to keep us out of trades. We make up stuff to put us in trades. Excuse me. So we need to determine what that thing is. He said, next it says stops are at 1.25, ATR beyond the higher high, higher close candle. I want to keep stops tight. Now my question with this is, the sentence, I want to keep stops tight, what does that initially make you think? Stops at 1.25 ATR beyond the higher high, higher close candle. So this green candle right here, the entry candle. I want to keep stops tight. Let me know what you think that means when you hear that. And I'll go measure out our ATR, right? So our low of our candle is 156.39. Our ATR is 25. That's going to be 14, 156.14 for our stop loss. Let's draw this red line down. 14, 14, 14. So stop loss looking right there. Great philosophy question to ask. Yeah, we have to. So two things here. One, we'll start with the stop loss. What do you guys think with the stop loss? It's 1 ATR or 1.25 ATR. I'm sorry. What's a quarter? What was our ATR again? 25, 12.5, 6. Take 6 more away from it. So 8. All right, so 156.08. Sorry about that. I forgot the 1.25. Okay, so here's the thing. When I read the sentence, and I don't know if this is true or not, but this is just from years of kind of trade plan reviews. When I hear the sentence, stops are 1.25 beyond ATR, I want to keep stops tight. When we add that sentence, I want to keep stops tight, it makes it seem like we're doing something out of the norm, right? It makes it seem like stops are usually further away, but I adjusted it for this situation because of a certain reason. And that certain reason is probably the fear that we mentioned above. So I don't know if this is true. I don't know if the stop loss is always this way, but when I see the sentence added on, I want to keep stops tight, I feel like we only add that sentence when we're justifying something that we're doing different in the plan. So the question is, are the rules for stop loss 1.25 ATR? And I don't remember. I know we spoke about it Monday, but my brain is limited bandwidth. But is the 1.25 ATR the normal stop loss procedure for this trade? Or have you made an adjustment? And if you made that adjustment, was this adjustment a part of your trading plan for this specific scenario? Or was the adjustment made based off the fear that we identified before? And again, I don't know these answers, so I'm not accusing the trader of it, but these are the things that we need to think about. So next is targets. And here's another one. More conservative targets taken with the fib from previous minor leg rather than the larger, more obvious leg. So again, more conservative targets taken from the fibs from previous minor leg rather than larger, more obvious leg. So what it sounds like to me is that normally the fibs are supposed to be taken from this swing. But once again, and this is the fear, and if you guys remember, this is the obstacle that the trader is trying to overcome. It's the fear of actually, hey, I'm doing a good job of identifying this stuff, but the execution, the fear, the worry, the doubt, this was the things, and you can see it all over here. So sounds like the normal targets are supposed to be taken from this swing, but this time I've decided to take more conservative targets from this swing right here. Now, why would we take more conservative targets? I'll move this over here to make it a little easier to see. Why would we take more conservative targets? Tony says pain avoidance. Or she says, what made him decide to do that? Tony says getting stops to break even to alleviate the fear of being in a trade. Yeah, that's a good technique. That follows up on the trailing stops we talked about earlier, right? As long as we do it the smart way, right, Tony? You'll tell people, hey, get stops to break even. And then like the trade will go 1 pip in their favor. And then they move it to break even and they're stopped out because of the spread. They're like, I don't know what happened to Q. I was up a pip. Now it took me out for -2. Well, you gotta let it go first before you go to break even. You gotta give it some room to breathe first. You can't smother it. But so what it seems like to me, again, same thing, lack of confidence. The fearfulness of maybe this trade not working out in my favor. I'm gonna, instead of taking my normal targets, I'm gonna take a different approach because it puts it closer, puts my targets closer. When my targets are closer, I feel like I have a better chance of them being hit. So we have this situation where the trader is doing a very specific act to accomplish a very specific task. And this is something that we all do. This is part of the self-sabotage. And the hard part about trading is, again, it's easily justifiable. Just like how I said, we can go into the chart at any given time, any chart, and justify a buy or a sell, right? And if we're searching for something, you see people that start on the daily and go all the way down to the 5 minute, where it's like, I see this on the daily, I just entered on the 5, right? Because they keep going down time frames, searching until they find what they want. But it's really easy to self-sabotage in trading for 2 reasons. One, our brain is crazy, right? If we don't have the ability to follow a strict plan, our brain is eventually going to, this is part of the independence and like the entrepreneurship thing, just like business owners, right? A lot of businesses fail, entrepreneurs fail simply because they have the ability to do whatever they want and no one's checking them. Like, you ever see people get like power hungry? I'm the boss, I'll spend this. Right, again, I was watching, we just finished up Ted Lasso the other day, and it reminds me of, if you guys watched it, Keely, who had her PR firm, and she's like spending up all this money. And then the CFO comes in and like, do we really need to spend like $10,000 on flowers every day? She's like, no, we don't, right? You need someone to check because we'll do whatever we want. When we have this freedom, we tend to do whatever we want. Again, think about when your credit card bank or company shoots you that email that says, hey, Cody, we've increased your limit by 10,000, right? Cody's like, yeah. I can go swipe that thing, right? Because we feel like we have this freedom to do whatever we want. But the truth is we don't. But in trading, that often goes unchecked. This is the importance of having accountability. This is the importance of having coaching or just someone to run these ideas by, so we can give you these little flicks on the back of the neck, these reminders that say, hey, should you really be doing this? And you're like, should you really be doing this? Should you really be doing this? No, right? We need those checks. We need those checks. And I say that even as coaches. You know, you can talk to Graystone. Something that Graystone and myself say all the time is that we've become better traders simply because we're coaching. Because we have that built-in accountability, right? We come into the live room and I can't do stuff like this. Because you guys know exactly how I trade and you're going to call me out. Hey, Keel, how come you used just a 5-pip stop loss instead of an ATR this time? You're right. Right? Now, some people are shameless, I guess. Some coaches are shameless and don't care. They'll BS you. But if you have any type of integrity, you stick to your guns because you're supposed to. So that would be another red flag that I see here. That's something that we need to consider. And again, the question is this part of the plan, or are these adjustments being made based on our emotional reaction, the fear state that it seems like we're in, or the maybe not even fear, but the less confident state that we're in. So real quick, and it says target threes, which I forgot what target threes are at. I want to say 127, 161. I forgot what target threes are at, so I apologize. But target threes were nudged down under the resistance level. So I don't mind that part at all. Right, I have in my plan that I can adjust targets based on structure. Again, as long as that's in the plan, then that's fine. And then other observations, yesterday's daily candle is bearish. Daily RSI is not overbought. Again, the question is the daily chart a part of the analysis? If it is, then yes, this stuff should be taken into account. If it's not, then we need to ignore it because we're simply going to use stuff to convince us what to do or convince us what not to do, right? And again, that's another thing we see a lot of traders do all the time, where it's like, if I were to ask Tony, and I'm like, Tony, hey, how do you trade? And Tony's like, I strictly go to the 4-hour and then I go to the hourly, and that's it. If Tony says that, and all of a sudden Tony's bouncing to the daily has nothing to do with Tony's trading plan. So he's only going there for 2 reasons. One, to find something, right, to convince him to take the trade, some confirmation bias. So you can be like, oh, yeah. Daily chart. Look at that hold. That's what I wanted to see. Or to find something to convince him not to take the trade. Where he's like, I really don't want to take this. Oh, look at that daily. I don't like that candle. That's a good enough reason for me. Because again, we're just looking for an excuse. And if we look hard enough, we'll find it. We look hard enough, we'll find anything. I can write a book on the ways and the things I told myself to convince myself to trade. That candle smelt good. I like that. Let's take it. Let's go. So many things out there, man. And that's not even counting the days when I used to watch. I used to run out of office in the city, and I had like 3. This is when I was brand new at trading. I was doing the whole kind of stereotypical trading thing. I had like 3 TVs up, or 2 TVs in a computer, and I was watching, CNBC and all the news, Bloomberg and Reuters and all that stuff. And like I would just watch, and I would just wait for them to say something that met with my opinion. So I'm like, in my mind, I'm like, okay, I'm buying euro dollar. If one of you just says bullish euro dollar, I'm in. And I'll be watching, I'm like, hey, John, or hey, Aaron, I think we should be buying the euro dollar today. That's it. That's all I needed. Boom, boom, boom. Buy it up. Right? So I just waited for any type of confirmation bias or anything to kind of meet my confirmation bias. Other observations here. There's a 3-bar reversal on the 4-hour at a new structure high. 4-hour RSI is not overbought. Again, the question we need to ask ourselves is, does this affect our trading? How do these observations affect our trading? Do they play a role? And if so, what role do they play? Lastly is the hourly RSI is not overbought. Again, the question is, does the RSI play a role? I don't remember the RSI playing a role. And these are just observations. So this could be thing for future study. But in general, these are the questions we need to ask ourselves. Do these things play a role? Or are we tracking them because they may play a future role? And if so, we put them in a note section, but we can't let them affect how we feel about the trade. Lastly, he says, I really would have preferred seeing price come down to a lower, I really would have preferred seeing price come down lower into the consolidation zone. Again, look at the wording there. I really would have preferred, is that showing the signs of someone that wants to be in this trade or someone that doesn't really want to be in this trade? probably doesn't want to. We put all the clues together. One, the closer stop loss, because there's not a trust in the trade. Two, the target adjustment, because there's not a trust in the trade. Three, the wording. I really would have preferred, right? Leaking no confidence in this trade. I really would have preferred seeing price come down to the lower consolidation zone, as my previous Elliott wave thinking looks like, in quotes, price should still come down lower. In retrospect, already going there. I could have placed a smaller lot size trade and given it more room to retrace. I guess there are more ways to skin a cat. If this entry is stopped out, I still have the opportunity to get in again at a lower price and be within my rules. But who wants to take a loss just to get in? And there's no guarantee that my second attempt may succeed. This is one of those trades I definitely don't feel good about. Is this what it's like to stick with your rules? And that part I'm very proud of. Because despite, and this is steps in the right direction. Because again, in conversations we've had in the past, it seems like this trader would see these opportunities and just be like, I'm not going to trade it. So we're taking steps in the right direction where the trade is still being executed. And we're not going to fix everything right in right away. But as long as we're a Kaizen philosophy, continuous improvement, 1 degree of change in the right direction each day, as long as we're working in the right way and clearing one of these obstacles, then it's beneficial. So what I'm proud about for this trader is despite the fear and the doubt and all this stuff, all the negatives that I just bashed him about. I hope I didn't feel like I was bashing. I always feel guilty doing these things, but I know like it's beneficial. I hope you guys don't take it personally. But despite all that stuff, he's still in it. He's still in the trade. I don't think it's live or see. I think it's just kind of just demo trading or whatever like that. I believe. I don't know for sure. I believe it's that way because the plan is still in progress. I think. But he still executed the trade. So we have to give hats off to that, right? Despite the fear and the doubt, the FOMO, the button was still pushed. Even if whether it's a physical button, whether it's a mental button, the button was still pushed. So that is a move in the right direction. But you can see, and if you pay attention to how people speak and how people write, you can tell a lot about their trade state. And Orsi says maybe he just needs to collect more data to get more confidence in his strategy. Yeah, it's collecting more data, and then it's also it takes, you got to form that belief, and we know that belief is formed by a few ways. Data collection, back testing is the best way to form belief before we can is the best way to get started. That's how you get the ball rolling. We don't have another option. So acquire data, look at your stats, you see your numbers. That's what back testing is for. You do your reps, you make your observations. You see that you have an edge, and you're like, oh crap, what I'm doing actually works. You start becoming more confident in it. Still scary as hell to do it in demo or live markets. But once you start doing it and once you start seeing the results, again, that's that belief action results cycle where we have our belief right here. We have our actions. Sorry about that. We have our belief right there. We have our actions right there. We have our results right here, and they all work together to strengthen each other. So what do? We have to gain that belief first and foremost. And again, it's very hard to gain that belief. Getting the ball rolling is extremely difficult because accelerating anything from a stock position is extremely hard. But again, we could do stuff like back testing, demo trading, stuff like this, running ideas through accountability groups to start gaining that belief. Eventually, you have to go out there and do it on your own by yourself in a live account, but at least you're armed with, at least you've been in the weight room before you go to push that boulder. If you look at back testing and accountability stuff, that's being in the weight room. At least you spent your time getting bulked up in the weight rooms. Now you can go out and give your best shot at pushing it. But if you've done everything correctly, once you push that boulder and you finally get it started, and it's extremely hard. You're going to make some mistakes, don't get me wrong. But you're going to start taking those right actions. You're going to start following the plan. Like I said, I don't like this trade, but I took it anyway. I had my doubts, but I took it anyway. And eventually, right, if you're trading with the edge and you're not sabotaging yourself, your edge will play out. You didn't do all that work for nothing. Your edge will play out. And you start getting the numbers. And you start seeing the wins. And the most beautiful thing, and again, this is the trade that stands out for me. I remember it, New Zealand dollar. was the first trade where I didn't want to be in the trade and I wanted to exit early like a million times, and half the group I was with exited early, and I was one of the more than half actually, and I was one of the few that stayed in, and it won. So I was in a situation where I really wanted to break all my rules. I really wanted to give in, and I didn't do it. It was out of stubbornness. I didn't want to do it because I wanted to yell at my teacher and be like, see, I told you rules are stupid. I would have made this much money. Now I lost everything, right? So I had my email, I had my sternly written email typed up already. And I'm like, Monday morning, I'm hitting send, right? I was so excited. Scared because it was Jason Stapleton, who, ex-military, stare into your soul. Very intimidating, right? But I was going to push it because I had confidence in my typing fingers. In person, I had zero confidence, but I had typing through the internet. I had confidence through the internet. But it ended up working in my favor, and I saw those results. And when I saw those results, my eyes opened. I was like, holy crap, this discipline thing works. This sticking to the plan stuff works. And I started believing in it a little bit more. And the more I believed, right, the less mistakes I made, right? The less self-sabotage I made, which resulted in me doing more of the right actions because I wasn't doing, right, addition by subtraction. I was doing more of the right actions simply by doing less of the sabotage. And then my results started getting better and better and better. And I started making more, and we're process over outcome, but I started making money. And I started making more money. I started getting more confidence in my thing. I was like, oh yeah, this really works. And then the cycle just keeps going over and over and over and over and over and over and over again until it gets stronger. So we're at the start of it, but it does take a while to finish up. So, but I would say this, back to the original point, my opinion on the trade. And that's a weird way to wrap up this segment. My opinion on the trade is this. My analysis in the beginning said that we were at structure. IPDE, identify, predict, decide, execute. I identified that we were at structure. We did not violate structure. So when I go to the prediction part of the process, I can't make a prediction that I think price is likely to go higher. If I can't make a prediction that price is likely to go higher, do I want to be involved in a bullish trade? I do not, because I never want to be involved in a trade that I don't think is going to move in the direction that I need it to move in to make me money. So initially, that my view on the trade from a technical perspective, I want to hit both ends of it because again, we all read the markets differently. So I'm not saying my way is the highway, but just my opinion on the trade from a technical perspective, I have no reason to believe that price is likely to go higher. So this wouldn't even be an opportunity in the first place for me because it just doesn't fit. It never gets past the prediction part of the process. Does that make sense, guys? And again, we can all read price charts differently. We all have different perspectives on it, but that would be my perspective on it. Hope you guys enjoyed the video. I may come back and do kind of a normal trading edge video as well. Maybe not a full longer one, but I may come back with maybe multiple videos, taking a look at a few opportunities that are on my radar for the week ahead. We'll see how busy the schedule gets, but make sure you're subscribed to the YouTube channel. That way, if I do it, right? Those videos show up on your homepage and you don't have to worry about missing them or anything like that. So hope you guys enjoyed. Leave a comment, leave a like, share it, of course, as always. And until next time, plan your trade, trade your plan. Wishing you a great weekend, and of course, wishing you a great week ahead.